Alright, y'all, so we're going to do some reviews on the trades that we took this week. So I just want to go over a couple things in my journal. Um, what trade did I win and what trade did I lose? I don't know why we got 1, 2, 3, 4, 5. I guess saves over here. This is crazy, but um, on August, like I won my trade on August. This was a dub over here on Top Step. Um, August 4th, again took another dub. I believe it's like it was the same thing as August 5th. Like I had two save entries over here. That's what it is. I understand. All right. So this is all the trades that I took this week. Now let's go to TradingView, and I'm going to show you guys where to look for it. The thing is, like, I like to save my trades somewhere. I like to save screenshots, and I want to save the fact that, like, did I follow my rules? Did I not follow my rules? And all that stuff. So and if I have any suspicions about my trade, I will upload a screenshot, and I will let my AI trading coach to analyze it for me to see, all right, did I actually do what I said I was supposed to do? So now let's go over Monday real quick. We're gonna go on replay. Um, the strategy that we are using is called ICT. All right, I'm pretty sure you guys are familiar with ICT. It's pretty popular. So I've been trading ICT for at least consistently. I would say at least a year consistently, and yes, it's been working tremendously. Can't even lie to you guys. Like, this is really dope. Um, I like to go on a 15 minute to identify liquidity zones, liquidity areas. So if we go over here, obviously this is London high. So I just like to put LH for the London high and L for London low. And then we have what over here? We have NY low. And over here we have NY high. Alright. So once we have all of these marked, of course we can always mark the Asian high and Asian low. All of these are important. Why they're important? Because these are our kill zones. You know, we want to know where our kill zones are. If you want to know what a kill zone is, if you go to the kaizentrader.com, they have like free courses and free quizzes. It tells you everything about ICT and smart money concept and what do you call it? Supply and demand. And supply and demand is not really working right now, so I wouldn't recommend anybody to use that strategy for the moment. Like, that shit better work. So as you can see, it's the same thing. We This is Asian high over here. Asian high gets swept. You know, we look for some type of a reversal over here. All right, and then we have London low. So like basically, what you want to do is like mark these areas. You want to mark these areas. These are our kill zones: Asian low, Asian high, London low, London high, New York high, New York low. So it's the same thing over here. So if we go to the 1 minute time frame, what are we going to look at? What are we going to look for? We're going to look for some type of a liquidity sweep over here. So we're gonna see all that over here get taken away. All right. So we're just going to let that play out. And another thing is, if it's nine, like if I see a liquidity sweep on New York at 9:30, I'm going to look for that reversal at 9:30. So over here, this could be a potential reversal for me. Going down to the New York and London lows. But I do want to, before I even try to do that, I would like to see price displaced over here and then give me a pullback within that 1 minute fair value gap, and then within that 1 minute fair value gap, I want to see another fair value gap within that fair value gap, if that makes sense. But this we just going to scratch this. This is just going to be a key level somewhere we want to target um for our longs, because we are no longer looking for longs. With ICT, you can't really have a bias. Um, don't have your bias too early, because if you said I'm only going to trade, if you said my bias is going to be New York, right, and then New York gets swept, and then after New York gets swept, it goes back to London lows and New York lows. Now you're like, okay, not saying like what is it? Where is it going to be the next liquidity? Right? It's nowhere to be found. So therefore, you don't want to have a bias. All right. So boom, we have our big old displacement over here, and we left a fairly gap. This is a potential fairly gap that can get filled, but a lot of time price will not come back to the fair value gap and fill it. Not gonna lie to y'all. So what I do is I use the Fibonacci tool, and I draw a like and I draw the chart, and I want to see price come to the 50% or the 0.38 over here for me to actually consider taking entry. All right, and if price keep on displacing, I'm just going to make it bigger. Again, price displace, I'm just going to make it bigger and bigger. All right, until we have a change of character. So now I'm going to be targeting. Honestly, you don't have to, like, I would say keep it in the same color, but you don't have to keep it in the same color. You can always, come back, like, you can always like look for the higher high and the lower low of that internal flow. So my target is going to be somewhere down here. So I want to see price come down here, and this is where I'm going to place my entry and have my stop loss right below that fair value gap over here, risking 500 to make about 1500 103. And I like to take some partials nowadays, so just for the sake of the video, I'm not gonna take partials, but I like to take partials, right? So we can go ahead and remove this over here. It's no longer important. We already got what we needed from it. So even if we did like have the fib drawn over here and we had placed our entry somewhere inside of here, we still have been good, just to keep that in mind. It doesn't have, the Fibonacci is not perfect, but you can always adjust it to your liking. And another thing that you could have done is like target this fair value gap over here. Like this could have been your entry over here, See how prices just came in, then created Doge's candlestick, then respected that Doge's candlestick, and then it started breaking back up again. Um, all of these things are what do you call it? Possibilities. Don't take it for like take it with a grain of salt. Meaning that don't just rely on that solely. A lot of people make the mistake of like just relying on price being perfect. Like price will not be perfect, and you will have to adjust your strategy a little bit, right? Meaning that um you might have to go to higher time frames. For example, if you go to the 5 minute, the reason why this was so precise is because of how price created this doji not doji candlestick but this hammer candlestick over here on the 5 minute, and then came back and retested, and price is gonna go move back up. So it makes sense to actually take entry over here, all right, within that fair value gap. So it's not just like, don't just look at one time frame, look at multiple time frames to get your bread and butter confirmation. As you can see over here, it's full TP get hit. Now we are going to move to the next day. I'm not gonna say too much on this day. I'm just really going to show you how price is moving within these days, between these sessions at least, because the same thing is going to happen over and over again, right? Over here, this is a lot of people might be like scared to get in over here, and I get it. Like I wouldn't want to get in over here, of course, but you can see how price just displaced, right? Like there's no guarantee that price is gonna come back, right? Plus, if you look at the 1 hour time frame, like we just took over all this, not took over, but we just broke through all of this liquidity, meaning that price is likely going to keep on going up all the way to this liquidity zone over here, these double highs over here. This is where price is likely gonna go to. All right, like these places over here, like at least when we can always look at higher and higher time frames. Like over here, you can see that price has a fair value gap within the 4 hour. Right, we know that price is likely gonna try to come into that fair value gap before it start moving back down. So boom, we get our confirmation that price is overall bullish. Plus we swept our New York session over here at 9 o'clock. We swept it, and then we had a bigger displacement. So now what we want to look for is, okay, so another displacement plus a fair value gap, and we got our fair value gap right within here. Honestly, when these fair value gaps are this small, I don't usually take them. Like I wait for price to fill it first, and then like adjust to it. Right, like over here, I know that price is respecting it, so therefore I'm just going to go ahead and place my trade in here, put my stop loss right below this candle over here, because this candle is like a um it's like a wall that you want to hide behind. You gonna use it as a shield to basically protect your capital. And of course we're gonna go for one or three. Over like over here, I could have really aimed for that fair value gap, or I could just like take some partials like over here. But in that case, I'm just going to let it go all the way to the fair value gap in the 4 hour to show you guys how market structure move. How the market like to absorb these fair value gaps. Like when I took this trade right here. 180 pips was okay for me, but I'm just gonna let it play out. So, and this is a trade that you want to trail, I guarantee you I would have been trailing my trade like over here, would have been the stop loss over here, or I would have moved my stop loss over here, you feel me, just trailing everything, you feel me, because on these trades, like anything can really happen, because like this is just how trading is, anything can happen. You always want to trade within the probability of the setup. So let's keep on going. All right. This trade over here had me confused because first and foremost, I woke up late on that day, and I just drew a Fibonacci. Like I drew a Fibonacci on this trade over here, right? Like on the 1 hour time frame, thinking that price is gonna come to the 50% of the fib, and then just keep going. But this seems to happen more in spring than fall and summer. So the best thing that happened was to do is just to wait for price to sweep liquidity. All right. So we swept New York and we swept London. Now we are going to look for a reversal on back to the top, and we start getting our orders filled over here. Our order blocks are getting filled. So we want to see that nice displacement, and then that fair value gap. Until then, we're not really looking to trade. So price is still doing its thing. Like that's why I say like we really want to wait for that fair value gap to go on the opposite side of this over here. This is not enough for me. You feel me? Even it like when it's small, like I said, when the fair value gap is this small, like I don't mind entering, but I want to see if price is going to respect it. You feel me? In that case, Price respecting it, and then disrespected it. Like I want to see price break these. You feel me? I want to see price break this little consolidation that it got going on over here before I really invest into that. And we simply didn't get it. But um, we could have. I think I did take this trade over here too. Yes, I did take this trade. So over here, so we didn't sweep this before we go up, but we did sweep London and Asian. So since we swept London and Asian, this over here, we had multiple entries over here. Like, but I took my entry a little earlier. I took my entry right over here when price had pulled back in this area right there. So let's just go on replay and see what I look like. All right. So I had my first displacement over here, and the Ferretti gap was just too wide, and a stop loss just would have been too crazy. You feel me? So therefore, that's not a trade I would have taken. I would have just let that trade slide. Although it swept New York, but I would have let it slide. So this is the trade that was meant for me because it gave me exactly what I want, and I got a very nice breakout structure over here. So therefore, I'm going to place my stop loss. I'm not stop loss. My sell stop right here, and yeah, and aim for the bottom lows over here. I'm going from 103. I really like a 104, if I'm being honest. But 104s do happen. Like let's say somebody was late, they could have always came back into this fair value gap over here because this fair value gap right here just makes sense to get in. You would have been risking about the same thing you're risking over here, which is going to be 37 pips. And this trade they took a little while longer. Some days it's going to be like that. And we secured about 146 pips on this trade. Now this was one of the best trades that I believe I took this week on Wednesday because I was just so patient, right? Like I was just waiting for price to grab liquidity, right? I was waiting for 930. I was waiting for every criteria to be met for it. So 925 ish, price moving, price is moving. All right, so 930. Got first 930 candle. Price moved down a little bit, then started moving back up. You already know what I'm gonna do when price start doing that. Use my Fibonacci tool. You feel me? Looking to see if price can come back over here. If I get more displacements, you already know what I'm gonna do. And, my buy stop will be over here, but didn't really get that entry right there though. So when you don't get that this type of entry, it's cool. Like all you have to do is wait for next liquidity, you know. But honestly though, since price kept on going, I took my buys all the way on top because market just gave me that opportunity and I executed a bit of it. But this would have been a very good trade over here. I keep on doing that. Hold on. There we go. So we could have taken that trade within that Ferretti gap over here. That Ferretti gap is perfect. You're not risking too much. You're not risking too little. Just perfect. Like 47 pips, 52 pips is not that bad. I'm going for 103. It's quite worth it. So price tag us in. We in here. Then this would have been our take profit. Targeting the external liquidity. Boom on round in session. And we could have took another entry out over here And the reason why this entry was pretty good is because price didn't, like, whenever price come close to a, what do you call it? Whenever price come close to a liquidity area and doesn't tap into it, like, it's just a pullback, right? So just wait for that pullback over here. Price came back, and at first I was like, okay, there's a first gap over here. Let's see if price could break it and then go back to the downside since it swept London. But since it was this close to the Asian, I was like, you know what? There's still a chance of price, going and sweep Asian session, and that's exactly what it did. So I'll place my buy stop over here, stop loss below here, and just put my take profit on top of that over here. But price went to Asian, swept it, stepped it, then finally tagged me in over here. Hold on, there we go. This was a very precise, like, this trade was really based off of like precision over here. Boom, there you go. And this was on Thursday straight. On Friday, this is what happened on Friday. Price sweep liquidity. Okay, this is the trade that actually got me confused. All right, now we get into the bottom of it. Yeah, so I had this fair value gap over here, and I was targeting this fair value gap, trying to go for long, but price went to sweep New York, so it did that, and went went my way. Hold on. So there's two ways I could have entered. I could have entered here, and I could have entered there. But let's say we did enter here, and the reason why I enter here, look at displacement over here, candle close. Feel me? Makes sense. But we would have been like, oh, we're gonna target this over here. But honestly, um, see if you see this break of structure over here, you see a fair value gap, just take a trade. Just have your stop loss in a place where it's not going to bother you. So stop loss would have been somewhere down here, going for 1 to 3. And if we had missed, because I did miss this, I missed this entry over here, but I didn't miss the entry on the 5 minute. I didn't miss the entry on 5 minute over here. There was a 5 minute for ready gap, and price came inside of it in 1 minute. Got a break of structure over here. Could have targeted this for value gap, place my stop loss below here, and then just let it fly. Full TP hit, and that was pretty much all the trades that happened this week. So based off of this strategy that I just showed you, do you think the strategy has a 90% win rate or not? If you're new to the channel, don't forget to like and subscribe. That would mean a lot to me. I'm more so teaching about technical analysis, but I'm going to start diving into the mental part of it. So if you guys want me to start making more of these videos, like, subscribe, and comment. And if you got any questions, comment down below. Let me know what was your favorite part. Let me know if you have any questions about the strategies, any minor question what the fair value gap is, you want to know what the liquidity is. Just let me know, and I will basically answer these questions for you.